Welcome to the morning podcast with me, Sudeep Shah. In today's podcast, we would be discussing about what to expect in Nifty and Bank Nifty from here on. Along with that, key levels for both the indices. We will also be discussing on key sectors and stocks that we should be focusing on post the rollovers yesterday. Now on expiry, we saw index opening positive. It carried forward its strength from Wednesday's bullish rebound from lower levels. However, once again around this 20-day exponential moving average of 19,750, index met with resistance. It witnessed selling pressure from higher levels, and not only did not manage to cross the resistance, it even breached the prior supports of 19,620 and retested 19,550 on the downside, so which is the 50-day exponential moving average, and it closed below that zone. So that for me is a bit negative. Now coming to crude prices, it is sustaining around $93-94 a barrel, quite uncomfortable levels. Now again, along with that, dollar index is sustaining around 106.50. So both these macroeconomic indicators are not showing a good picture, and that is leading to the upside getting capped as far as the broader markets including Nifty is concerned. Now let's just speak a bit about India VIX. Now this volatility index has given a breakout about 12.8 yesterday, and remember, it has consolidated for over 4 months, and post that it is giving a breakout. So that's extremely important to track from here on. Any move beyond 13 in India VIX could lead to a move up to 14 and a half, 16 levels in the next few weeks, and that could lead to some pressure at higher levels as far as indices are concerned. Now coming to index levels, post the continuation of the fall yesterday and from the last few days, the critical resistance for the day could be 19,620, 19,650 on the upside, and any move beyond this could trigger a short covering move up to 19,710 and 19,730. Now this is where the 20-day exponential moving average is placed. So positionally now from here on for this next few sessions, 19,730, 19,740 zone, it would be extremely crucial to cross. On the downside, the supports are at 19,440 followed by 19,360. So these are the crucial numbers to watch out for on the downside for the day. Significant put writing is visible in 19,500 and 19,400 strikes, while on the calls front, 19,700, 19,800 strikes have a significant share of open interest built up. So this means that the overall range for the day could be 19,400, 19,430 on the downside, and 19,650, 19,660 on the upside, and we could see some kind of a sideways to negative bias throughout the day. Now, even if in the fresh series we witnessed some kind of a sharp immediate rebound in the first few days, I feel we should be still exercising great deal of caution while chasing momentum on the upside. Coming to Bank Nifty, key supports for Bank Nifty now lies around 43,850, 44,000, which is exactly the zone from where the rally had started in August end. So just need to be a bit cautious while Bank Nifty is approaching this zone. And the key hurdle on the upside could be around 44,700, 44,850, where the 20-day exponential moving average is placed, and sustaining above this zone, say 44,900, we could see a short covering move up to 45,250, 45,400 on the upside. Significant open interest built up is witnessed in 44,000 puts as well as 43,500 puts and 44,500 and 44,700 calls. Now this implies a trading range of 43,850 on the downside and 44,850 on the upside for the next few sessions. Again, trend in HDFC Bank and ICICI Bank would be the key for Bank Nifty's move from here on. Now yesterday we saw Bank Nifty holding out for a better part of the day, and that was because Axis Bank was still holding out, so it kind of provided support, but the main culprits of the downfall are HDFC Bank and non-performance of ICICI Bank. So both of the momentum in both these stocks would be extremely important from the next few days perspective. Now having a look at the rollover analysis that has been concluded yesterday, rollovers for index futures is lower at 76%. Now the previous month it had recorded 78%, and the last 3 months average is 79.3. So the current month's rollovers are much lesser than the previous month as well as the last 3 months average. Also, month on month, the position declined, is at 104 lakh shares versus 106 lakh shares. So, firstly, if we look at this data and add to that the long short ratio of index futures for FIIs, which is now dipped to 30%, which is one of the lowest numbers that we have seen in the recent past, it seems that firstly the long positions have not been rolled over. Secondly, there has been excessive short positions that have been started to build on. So initially it could be negative, we should be a bit cautious, and just let me add one data point here, that this is the second consecutive series where the rollovers in Nifty futures have been below their 3 months average. Now coming to Bank Nifty, this index settled at 44,300 yesterday. It gained month on month 0.7%, and the rollovers were higher. Now here there is a catch. The rollovers have been higher at 85% versus 77% of the last month and versus 80% of the last 3 months average. So higher rolls versus 3 months average. This indicates that, and along with price decline, if you add this indicates that these could be kind of short positions, and that is why we feel that we should be a bit cautious going into the fresh series. Market wide rolls are at 92% compared to 91%, and the open interest base has jumped by 5 to 6% in absolute number. So this implies that there has been a lot of stock specific bets taken by the market participants, and index bets are not that visible. So it could be a stock specific market in the next few days. Talking about seasonality, out of the past 10 years in October series, Nifty has closed positive for 9 years, and average gain in these 10 years have been approximately 3%. And the average volatility is 7% for the month. So gains are okay, but the volatility is a bit higher in October month. Similarly, Bank Nifty also has closed positive 8 out of 10 times with 6% average gains, and the average volatility is 10%. That is the range for the month. Potential outperforming sectors based on the rollover data could be PSU banks, power, and telecom. And underperforming sectors where we feel that there could be some kind of a negative as well as a sideways bias, that could be oil and gas, largely due to the non-performance of Reliance, and due to the crude prices spiking up. All the OMCs are also under pressure. Along with that, FMCG, media, textile, chemicals, all these sectors based on the rollover data could be potential underperformers. Now if we see the top picks as per the rollover data, we feel above average rolls plus price rise has been visible in Dixon, Bharti Airtel, Larsen and Tobro L&T, Chola Finance, MCX, REC, Canara Bank, and Axis Bank. So these would be our top picks based on the rollover data. Now if we observe the FII data yesterday, FIIs have been net sellers in cash segment to the tune of 3,364 crores, while DIIs have supported the markets buying to the tune of 2,700 crores. Now FII's long short ratio for index futures has dipped to 30% at the beginning of the fresh series, which is extremely negative and is indicating a strong possibility of the short positions being rolled over. FIIs have sold index futures yesterday to the tune of 36,431 contracts, sold stock futures closer to 1,18,500 contracts, and on the option front, FIIs have bought 30,850 index call options and also bought 34,740 index put options. So tracking this data, it is negative and more of a scenario where the FIIs are booking their long positions at every rise. So just to summarize, we expect indices to witness buying support on dips, with key support level for Nifty being around 19,400, 19,440 and resistance around 19,650, 19,670. The bank Nifty, the key support zone would be 43,850 to 44,000, and the resistance could be 44,700 to 44,850 for the next few sessions. So friends, that's all for today. Thank you all for regularly listening to our podcast, and wishing you all an energetic day ahead. Do tune in tomorrow for more market related updates and insights. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.